What's up traders? Welcome to another video. When you are sitting on your trading desk looking at the chart, millions of traders around the world looking at the same chart. So when we all look at the same chart, 9 out of 10 traders lose money. Now what this one trader does differently that he or she makes money. Trader Tom said that normal doesn't make money in trading. He is right. If you are thinking normally, then you will not make money in trading. To make money in trading, you have to do and think differently, different from this 9 who is losing money. So in this video, I will discuss a strategy that requires a little bit of abnormal thinking. Now, if you think that you are ready to understand what I am going to present today, then stick till the end of this video. Try to understand what I am presenting. Once you understand this strategy, that I am sure that you are going to be one of these 10% people who really makes money, because this strategy is based on Forex master pattern. Sound interesting? Then smash the like button for me. While I am playing intro and disclaimer, hit the subscribe button for me. Press the bell notification so that you don't miss out any of the masterpiece that I release almost every week that will change the way you trade. Okay guys, so before I begin with the real chart, let me explain the theory of this strategy. Sit tight and try to understand. If you don't understand it, leave a comment. I will answer straight away. So first of all, let me explain. So forget about trend, forget about trend line, level, everything. Just focus on one thing. Look at this line here first. Okay. So first of all, look for an impulse in the market. So like this impulse, that means one green candle, another green candle, another green candle. So this is what we call an impulse. Okay. So when you see an impulse in a market, after a certain period of time, you might see a consolidation. So this leg, this you see, it is an impulse. Okay. After this impulse, what you see? A consolidation. Okay, like this consolidation. Now this consolidation, this is the impulse. This consolidation could be like this, could be like this, could be like this. Okay, whatever the shape, what we will be looking for, an impulse and a consolidation. Now ideal scenario like this. So this is the impulse and then the consolidation. So when you see an impulse and then consolidation, okay, this is what you have to first look for. And then in this consolidation, what you will do, you will draw a cross like this. Okay, a cross, an X. First of all, again I am explaining. Be patient and try to understand. Impulse and then cross. Okay, like this. Now this consolidation has to be in this cross. Now this cross can be like this. This cross can be even like this. Okay, so if the cross is like this, then could be like this. This is the consolidation and this is the impulse. Okay, or it could be like this. So cross could be like this. Okay, if this is the like this, then this is the impulse. Okay, and then the consolidation like this. So, and when you found the cross and the impulse, then the next is to look for a fake out to one side. Okay, so this is the consolidation. After this, what happened? There has been a breakout to one side, and then after one candle or two candle, the price immediately went back to the consolidation. This is what we called a fake out or a false breakout. Now when the false breakout happen, what will happen? You is likely to see that this price is moving the other direction. Now when we see this is one side is a fake out, then we might consider that the other side is a breakout. Remember, when you see a breakout, do not jump on a trade until you see a retest of this X. So if this is the X, one leg, this is another leg, okay, then what you see that first of all a fake out of this level. When you see this way is the fake out, and then what happened? The price broke to the other side. Now after this breakout to the other side, the price again will come back to retest. Now you do not satisfy yourself when you see a retest of this leg. You need to see a retest of this both leg. When you see a retest here, this is where you will be entering a trade, because you see there is a fake out to the one side and then there is a breakout to the other side. After this breakout, what you see a retest of this trend line as well as of this level or trend line. When you see a both retest, when you see an entry candle here or a double bottom in this zone, that is where you will ride the trend for a big move to the upside. This is the first criteria. Now let's see another criteria. The same scenario, look at here. Try to understand guys what I am telling. This is going to be super important because this is how market moves, and this is why most traders lose money, because they cannot think differently. You need to combine your trading psychology, money management with this strategy to become super profitable trader. Once you understand it, this one video can make you consistently highly profitable trader. Pay attention. Now let's see the other scenario. So this is another scenario, the same scenario, then impulse. I will show you in real chart. First try to understand impulse, and then what happened? The consolidation, the same way consolidation. Okay, now in this consolidation, look, the pattern is a little bit of different, but same thing. Always you have to look for this X pattern. Okay, so when you see this X, okay, this consolidation X and then fake out to the upside. Now see the difference here, the same impulse but fake out to the downside. That means when you see fake out to the downside and then break out to the upside and then retest of this trend line, that is where this is likely that this will rally, this instrument will go upside. Now when you see the different scenario, the same kind of pattern but fake out to the one side, fake out to the upside, and then what happened? The price immediately come back to the range and break out to the downside, and then what happened? The price went up to test this trend line as well as this level, and that is when you can enter the trade on the retest. That means, what do you mean by retest? It could be another fake out. When you see this retest is valid, that means when you see a rejection from this level with a double top or a head and shoulder or a valid price action pattern, that is where you can enter a trade for a big trend to the downside. Now this is the two scenario for a bullish impulse. So when you see this impulse to the upside, now the same scenario can be applied to for a bearish market that you will see in the chart. Just you need to think it the other way around. Now these are the two ideal scenario that you will see in real chart, that what I am going to tell you about this strategy. Once you understand it, you never have to lose money as a trader. Now let's jump onto chart to see what I am going to tell you now. Okay, first let me show you this example on GBP CHF. Now this is a recent chart. We secured 1 to 5 risk to reward ratio trade from this chart applying this strategy. Now let me show you what it is. Now first, what you look for, the impulse, okay, and then next you look for an X pattern after this impulse with a consolidation. Now let's look for these three things. Now first of all, look at this impulse. This is the impulse, a clearly visible impulse to the upside. And then what happened? The price consolidated in this area. Look at this consolidation. Now let me replay this chart from here so that you understand clearly consolidation and the breakout. Now look at this here. Okay, so impulse, let's draw the impulse here, and then let's draw the X pattern so that we can clearly identify what it is. So let's draw the X so that you can clearly understand. Now so this is the clearly visible impulse and X pattern. Okay, now we have got the impulse and we have got the X. Now let's replay the chart. Okay, so see that the price is clearly broke here from this X pattern. Okay, now what happened? First of all, see, there is a false breakout to the upside of this X pattern, clearly visible false breakout. The price like this created this pattern, and then what happened? The price broke to the upside, came back to the range, and then broke to the downside. Now we see another breakout to the downside. Now let's see what happened. Now see, and then what happened? The price went up clearly. Let's draw this line properly so that you can understand it how. Okay, now what you saw, that after this impulse, this consolidation, false breakout to the upside, this is the false breakout to the upside, and then what happened? The price broke to the downside, tested these two lines properly. So this is the support line here, support, and then tested as a resistance. Both level tested as a resistance, and then the price started to rally with a huge trend. Still it is going down, and next week, this is the weekend, definitely we will see an impulse to the downside, and that is the beauty of this strategy. Once you get the point, this is a huge move to take. Now let's see this one we can match with this theory that we have learned. So what we have seen just on GBP CHF, this is the pattern. This is the pattern: impulse, fake out to the upside, breakout to the downside, tested the previous support as a resistance including the trend line, and then the price dropped with a trend. Now let's see another example confirming this one. Okay, so let's see this example. Now remember, this strategy works in all time frame. Either you are trading in 5 minutes, 15 minutes, 1 hour, 4 hour, daily, no problem. In all time frame and in all instrument, this strategy works because the market, this pattern occurs in all time frame. So let's start with USD JPY on this daily time frame. Now what you see, that a clearly visible impulse from here. Okay, so this is an impulsive leg as we have discussed. Let's draw it here as well. And then after this impulse, what you see? A consolidation. Okay, so clearly visible consolidation. Now let's replay the chart from here so that you can clearly see the consolidation. Now this is the consolidation after this impulse. Now let's draw the X after this consolidation. Now this is the X that after this consolidation that we are looking for X. So this is one leg. Let's draw the other leg so that you can see how this works. So this is the X. So let's draw it here as well. X. Okay, consolidation and the X. Okay, we found the consolidation, we found the X. What is the next? Let's replay how this happening. Now look at this. It has broken to the one side. Okay, after this breakout, what you see? A retreat to the consolidation. So this considering that this is a fake out. Okay, so after this breakout, and then the price went again in the consolidation, creating a false breakout. So what you see here, the same way, consolidation and then the fake out to the downside. Now when you see fake out to the downside, what you can expect to break out to the other side. Now let's see if we see the breakout. Okay, what do you see, that breakout to the other side, and then the price. Now look at this. Now let's see how it has retested. Now look at this here. We have adjusted this here. Now what you see, that the price tested here, okay, in this red, with this red candle, tested this resistance as a support. Now this one, first of all, it has tested this support as a support, and also this resistance as a support. Here double retest both of this line as a support, creating a double bottom. And then what happened? The price finally started to rally to the upside. Now this is the move after this. So this is quite a big move if you trade from here. Still after this the price came down again, but this is a good move to trade. Now this is another example. Now let's look at more examples for a bearish market. Okay, so let's see this example in the same instrument, USD JPY, same time frame on the daily. Okay, so let's start from here, the clearly visible impulse. Okay, impulsive level. Let's draw the impulse as well at the same time, so we can see how this strategy works. So impulse, and then what you see, a clearly visible consolidation. So the same way that we have expected. Now let's find out the X in this consolidation. What you see, that this instrument was consolidating in this manner. So let's draw the X so that we can find out where we need to look for. So this is the clearly visible X. Now let's draw separately as well so that we can understand this impulse. So this is the impulse. Okay, now let's find out the X in this impulse. Okay, so this is the X that in this impulse. Now what do you see, that just the other way around, the opposite way of what we have just seen in my previous example. Now this is the consolidation. Okay, now in this consolidation, now let's look for the fake out. Where do you see the fake out here? Clearly seen the fake out is here. Okay, so it's already created a fake out quite a few times here and here, both areas it has created a fake out. So what you see in this consolidation, that so let's draw this consolidation and fake out pattern here as well. So consolidation and then the fake out to the other side, should be breakout to the on the other side, and then retest of this both trend line and then trending to this direction. Now let's see how it played the same role here. Now fake out to this one here, and then coming back to the consolidation, continuing the consolidation, and finally breaking to this side, went up, tested both of this trend line as a resistance twice, creating a double top formation, and then finally trending to this direction. And when you enter the trade here, it's a huge move to the downside. Now let's see here what we have just seen here. Now clearly visible that this is the impulse, and then consolidation, and then fake out to the upside, breakout to the downside, testing as a support, as a resistance, and then trending to the downward direction. And this is where is your entry. Fake out, no entry until see a clearly identified retest of this both line of this X, what you found in the strategy. Okay guys, so let's see this example on British pound US dollar in 15-minute chart. Now I'm showing this in 15 minutes so that you understand that this strategy works in all time frame. So let's see this area here. Okay, let's find out one by one. The first step is to find the impulse. That means the breakout from any kind of consolidation now or change of trend. Now what you see that this is the impulsive leg, clearly visible impulse after this big consolidation. We found the impulsive leg. The next thing is what you will be waiting for a consolidation. Now what you see here, this is what we are looking for, the consolidation pattern. So in this consolidation, the next thing what we will be looking for, an X pattern. Now let's see where is our X. Now if you draw this long-term trend line where you can find the X. Now normally this X you will find from the trend line. And then what is the next line of the X? This is the other line of X, because what you see that basically the price consolidated in this area and then broke to the below again. Now what you see here, that look at this here. If we draw this separately, what you can see that basically this is the X pattern, that what we are looking for. So impulse, so this is the impulsive leg, this is the impulsive leg, and then this is where consolidation. And then what you see that there is a fake out to the upside twice, because it's a lower time frame. That's why we see a 2 times fake out. If you see on 4 hour or even hourly, you might see one leg. So fake out to this side, so consolidation, and then the fake out to the one side, and then breakout to the downside. What you see then? Breakout to the downside. Now after this breakout, what you see? One retest and then another retest of this both trend line as a resistance, and then finally broke to the downside and moved to downside a lot. So this is a big move to catch. If you can understand in time this how this strategy works. Now you might be asking few questions. In the meantime, you are saying that is it all the times happening the same way? No. In Forex, nothing happens all the time in the same way. Then how you will be trading? Remember, what is a strategy? When a trader master their brain to recognize a strategy, trade a strategy, then they stick to the strategy until they see the pattern develop. They do not trade. And that's how this strategy works. If you want to apply this strategy, first of all, you have to observe the market. You need to wait for this pattern to be developed patiently, and then you will enter the trade. If the market do not create this pattern, if you are trading in this strategy, then you do not trade, or you may be applying other strategy. The way this any kind of strategy works is, if this strategy does not develop, then you do not trade this strategy, or you do not trade at all if you only work on that strategy. And that's how traders make money. Now if you look for a strategy in everywhere, you will not find it. There are many situations you will find that the market did not retest, or the market did not make any consolidation pattern, or maybe they did not develop this pattern. But when this pattern is developed, then this is a high accuracy, high probability trade setup. I sincerely believe that this video was helpful to you. Before I finish, let's recap what we have learned so far. So what you will be doing is basically either uptrend or a downtrend. After an impulse or a breakout from a consolidation, you'll wait for another consolidation to develop. Now in this consolidation, what you will be looking for, an X pattern, okay, what I call the X pattern. Now in this X pattern, what you will be looking for, which way the market creates a false breakout. So if it is creating a false breakout to the upside, then you can expect it to break to the downside, but not sure, it might again go back to upside. So until it goes up and retest of this both trend line as a resistance and create a reversal pattern such as double top, or it gives you maybe a double top on the lower time frame 15 minutes, but on the higher time frame on 4 hour you might see a hanging man, or in the daily a hanging man. When you see a pattern that you can trade, and then you can go for short from this area with a huge risk to reward ratio. And that is the beauty of this strategy. Now this is a master pattern, this is a master strategy. If you can train your brain to recognize this pattern, you are done. I sincerely believe that this video was helpful to you. Thank you for watching. Leave a comment below if you have any question, and I see you soon with another video.